So drawing a close to the series that we've been conducting on insurance, I thought it'd be a little bit of fun and something a little bit different to invite the two guests that we had in both episodes back onto the show in a panel style discussion. It's a little bit of a different format, and I thought it'd just be good because knowing that there's a lot of different crossovers with insurance, and actually the reason why that I'm speaking to both of these guys is for that exact reason, that they are specialists in different areas of insurance, and there is a bit of a crossover, yet they do work together quite well in explaining and helping, I suppose, us as insurance policy takers, understanding, what the difference is and the conversations and the questions that we should be asking towards different specialists, which have their own areas of expertise within the insurance realm. So in this podcast today, it's a three-way conversation between myself, Dan, and Jez, and we're talking a little bit about the dynamic and the relationships between different insurers, the relationship between, I suppose, different policies out there and how they come together to form effectively a suite of insurance policies to represent you or your business or your family or whatever that might look like. So enjoy this conversation, guys. It's casual, but the idea there was to I suppose bring it all together so that we try to eliminate some of the conversations that might get mixed up within communicating between different insurance brokers. I suppose fundamentally a big takeaway for me in this episode and this series is it really does pay dividends, guys, to use brokers, especially with something as complex as insurance. I've been in situations myself only recently where I've had insurance claims that I've had to put through, and man, having someone there to do those claims, I'm sure would have been so much more beneficial. And I know a lot of the guys that were on the trip that we were on, they didn't get their insurance policies paid out because they didn't use brokers. They went directly to the companies. Luckily, I did go to a company and I got mine paid out regardless, but it would have been considerably easier. And to be fair, if you're trying to avoid costs with insurance brokers, my experience is it doesn't cost anything extra. In some instances, it's considerably cheaper because you're getting the right cover and you're getting the right help that you need. And it's certainly worth paying for in most cases. Anyway, guys, if you have any questions around insurance, if we haven't covered off on anything, on something that you'd like us to cover off on, please let me know. I did try my best to cover all angles here, and we brought experts in that can represent those different angles, but knowing full well that insurance is a huge animal, the chances are we may have missed some things. So if there's something that you'd like us to cover off on, please jump into the Facebook community, let me know what that is, or wherever you see this come across social media, let me know what we've missed, or if there's anything you want further clarification on, and I can get either one of or both of the gentlemen you've met in this series to come back on and answer those questions for you. Anyway, guys, if you enjoyed it, please like, subscribe, share, spread the good word. Much appreciated if you do that. Otherwise, guys, I look forward to chatting to you in the community, and that's a wrap from me. Ciao. Today's podcast has been proudly brought to you by Tradie Web Guys. Tradie Web Guys work with tradespeople only on their websites and marketing solutions to help them stand out from their competition. Everything from web design through to SEO, search engine marketing, content creation, you name it, guys. It is a customized solution for trade-based organizations, and it's fantastic. Head across to tradiewebguys.com.au/apply, fill in the form, and let's have a conversation.
Giving tradies and contractors around the globe the tools to run a modern business. You're listening to Toolbox Talks from the Site Shed. Now here's your host, Matt Jones.
Hello, listeners, and welcome, and viewers, I should add. Welcome back to the Site Shed podcast. You're joining us today for the third and final episode in the series that we're doing about insurance. Now, don't fall asleep. If you've been here for the first two, you'll know that this has actually been a super informative podcast series. And I'm joined by a couple of experts today because we're tackling a bit of a panel discussion where we're going to be talking about some of the more common scenarios around insurance claims and how you can potentially avoid certain situations from the experience of guys that have been there and done it. So I'd like to certainly, before I introduce today's guest, just recap, I suppose, on a bit of a framework of this series and how it came about There was a conversation in the community from Rachel who said, what does everyone think about life insurance and income protection? Do you think it's worth it? And I had been wanting to cover this for a while. I never really, never got around to it for one reason or another, but I thought no time like the present in order to cover these things off, because to be fair, and as I found out from recording the last couple of podcasts, it is insanely relevant to anybody listening to this, even if you're not in the trades. You certainly should be taking on board what you'll hear. If you haven't had a chance to go check out the first 2 episodes, make sure you do that, because a lot of what we talk about today will probably make a lot more sense if you've heard them. But the first episode there, I'm talking with Dan Blatch, and we're talking a lot about, I suppose, your life insurance and income protection and death cover, and things like that. And in the second episode, I was having a chat with Jeremy Andison, and we're talking a lot more about the general side of insurance in relation to your workers' compensation, tool insurance, motor vehicle, public liability, so on and so forth. And today we're coming together as a group, and we're going to try and tackle, I suppose, a few of the crossovers there. And we're just going to talk a little bit about some of the experiences that the guys have experienced themselves from dealing with people or tradespeople in situations that need insurance claims, so on and so forth. So, gentlemen, welcome back to the microphone.
Good to be back.
Thanks, Matt. Good to be here.
There's a slight delay, but I'm sure we'll get through it. And this is two days before Christmas, so I think we're all pretty eager to wrap up and crack a beer. So thank you very much for your time, lads. Much appreciated. As I said, the first 2 episodes were fantastic and extremely insightful. And as a result, I certainly learned a few things that I hadn't been doing right, which I'm still waiting for that email, Jez. But it's a very interesting and relevant topic of conversation, especially in the wake, I suppose, of a colleague of mine that's recently been through an insurance issue and couldn't get cover. So I know for sure you guys as brokers, you certainly have a different, maybe not a different approach, but certainly a different point of difference when it comes to insurance policies, taking out insurance policies, and then I suppose making sure that people have the right bundles that are applied to them. Because as I found out from speaking with both of you guys, it's very rarely a case of one policy will cover you for everything. So, lads, first of all, why don't we talk a little bit about going into this panel discussion? I'd like to hear about some of the more common, I suppose, obstacles that you guys have helped clients of yours navigate insurance claims, helping them get through that otherwise may not have happened if they hadn't had the foresight to come to you guys and you guys had secured the policies that you did on behalf of them. Maybe Dan, we'll start with you just on the life side of things.
Yeah, sure. Thanks, Matt. I suppose one of the most important things that I'd open with, but for a number of claim stories that I can talk through with you, is that the overarching principle is that life insurers are very large enterprises and claims departments within them are even bigger. And to just sort of give you a sense, whilst I'm certainly representing any one particular life office here in any way, shape or form, that more often than not, life insurance companies are out to play all legitimate and eligible claims very swiftly. Unfortunately, the media does give it a bit of a bad rap, and like so many things in life, a few bad set of circumstances often cop the focus. But the one thing I will say is that most life offices nowadays really are using claims as a form of customer service. They want to get eligible and legitimate claims paid swiftly. That's the first thing I'll say. But having said that, having someone on your side to deal with these large organisations, I really can't emphasise how important that is. One sort of perhaps meaningful example I've got for some of your listeners, Matt, is I had a tradie last year. He works outdoors quite a fair bit. He fortunately met me 2 or 3 years ago. And as part of his lifestyle protection, his cash flow protection, we agreed that a trauma policy, which will pay him a tax-free lump sum on diagnosis of any 40-odd conditions, would help him. it turned out he went and saw his dermatologist, and he had a very small melanoma on his ear. But what actually happens with a number of trauma policies, Matt, is you've got a 90-day qualifying period. So we could take the policy out today, and if we happen to suffer from a cancer event within that first 90 days, you're ineligible to claim. It just so happens that we're at day 87 for this particular tradie, and long story short, we were able to get the claim paid on what the industry would refer an ex gratia claims payment, meaning technically the life office had no legal obligation to pay this claim.
Wow.
But given my relationship with the life office, the client was a good client, and that everything was totally disclosed up front, the client was $350,000 better off.
Wow.
And I suspect had they had taken that policy out themselves. So I've got a whole host of examples where claims have been paid on what we call ex gratia basis. Quite certain that not just myself, but any good specialist who has deep relationships with claims departments are able to get these claims paid efficiently. But it's just really hard working up against these large enterprises. Being a minnow amongst the giant is difficult. And just as an overarching premise, I just say there's real value having a specialist on your side to help liaise the minefield that can be claims.
That's incredible, because I've always been of the opinion that it was very black or white when it came to insurance claims, but it sounds like there's a fair bit of grey if you know people.
Yeah, look, I don't want to sort of say it's always that way. There've been some instances with some life officers where I haven't, but I guess just more often than not, we back ourselves in to be there at claim time. And it really sort of completes the circle for us. And I'm sure Jess would support this view too, Matt. If we're there at the coalface, we're talking about the value of transferring the risk of, from, in my instance, serious illness or injury onto someone else. The rubber really hits the road at claims time. So if we can't deliver on that promise at that point in time, be it the life office or the advisor, we really shouldn't be in business. So I guess we're sort of a really good specialist should pride themselves on getting busy working at claim time.
It's kind of, it certainly does stem a fair way apart from that whole mindset of, well, insurance companies are there to take my money and they're not really that interested in paying out.
Yeah, and I know historically, so I used to work in claims, Matt. I think I said in our earlier episode, and I know historically, certainly perhaps before I was born, maybe claims were far more black and white and there was more of a litigious nature to them. But I can assure you, most life officers nowadays, they want to pay them quickly and swiftly. There are even instances, Matt, where they've got these guidelines where a particular type of injury, all the data that they've collected over the decades suggests it should take this long for that person to recover from that. But if we wait that amount of time, chances are perhaps a secondary condition might arise or something else might go askew in the claimant's world. Insurers have realised they're better off quickly paying it, allowing the injured or ill person to move on, get on with their life, and just ending that claim process quickly. And in some instances, that's paying more than the claims department otherwise should have, just in order to move it along. But
is it hard in that instance for the person making the claim to get another insurance policy looking forward?
It very much depends on the illness or injury. This is where it's tricky because there are a whole host of sort of moving parts in that. There are policies where you can take out where if I suffer from a cancer event today, within 12 months, I have the right to buy back that trauma policy, which won't exclude certain types of cancer. And then there's also certain issues where, yes, we can apply for cover later on, depending on what the illness or injury was, but the underwriter might exclude that illness or injury in any future policy you take out. A tricky one. How long's a piece of string? But there's always an opportunity to apply for more cover should you be unfortunate enough to have to claim.
Because that remission window in the instance of cancer can be quite, it can be anywhere up to 5 years or something, can't it?
Yeah, absolutely. Yeah, I've got a chap who has had thyroidectomy, had thyroid cancer. He's been 10 years in remission, yet still some underwriters won't won't offer terms for him when it comes to that particular type of cancer. They'll offer a trauma policy, but they'll exclude that type of cancer in relation to his new policy. So really, we should be designing it up front so that should we be unlucky enough to claim, the sum insured that we'd be in receipt of or the benefit amount should be able to help meet our initial sort of requirements up front.
Jez, years ago, I had my work ute broken into. I was coming on the way back from the airport, stopped off for dinner at the pub in Mossman. Someone smashed the window, stole the laptop, and insurance denied it because it wasn't locked up in a lockable container in the back of the car. And I was thinking, are you guys freaking kidding? Like, who has a lockable container in the back of a car to put a computer in? These kind of scenarios, I imagine, are things you come across all the time.
Yeah, quite a lot actually, and regular issues with insurers on things just like that. The classic example is you're in a shopping centre, you go to get some food, you leave your laptop on the table for a minute, come back, oh, it's gone. Yeah, they're very regular occurrences, and similar to sort of Dan's scenario, there's always conditions and exclusions that apply, which sometimes, depending on the level of cover, the amount of premium, all that sort of thing, you can apply for a pro rata payment or maneuver the insurer into paying something for you.
Does that kind of tie into what Dan was saying about having that relationship with the underwriter, as opposed to me in my situation where I took out the claim and they were like, no, you're not insured because of this. And then I was more like, well, screw you. And
yes and no. I mean, it's all about the policy wording that you're getting. Now, via a broker, it's our job to ensure that what we're actually providing you is fit for purpose, as opposed to a direct insurer, call it, 1-300 insurance. They're just going to say, hey, Matt, what do you want to insure? And the obligation is onto you to understand what you're actually buying into. Now, going a step back, when a claim does happen and it's borderline 50-50, obviously a one-off Matt Jones versus the insurer, you might represent $300 or $400 of premium to the insurer, whereas via a broker, we might have hundreds or millions of dollars of premium pool. Therefore, it's a commercial decision that, hey, let's keep these guys happy. Let's pay this guy $5,000 to settle that claim, or whatever it may be, because we don't want to jeopardize the commercial aspect we have.
Oh, that's interesting. Yeah, I never thought of that actually. I suppose that would be a massive draw card.
Absolutely.
Yeah.
So if I can just quickly butt in there too, Matt. Sorry, I think the thing is that for most people, a claim is something that happens once or maybe twice in their life. In my game, you hope it never happens. But if it does, it's like buying your home, Matt. Most people only do it once. And I don't know about you, the last time I did something once, never again. I look back at it and I think, geez, I would have done that differently, I'm sure, if I'd attempted it on the second time or the third time. Right? So do you want to go down that journey alone? For some people, it might be appropriate. Or do you have someone who's walked that path a million times before, knows what the actual crux of the issue is, knows where the contentious items might be, and frankly is underwriting that on your behalf. So for us, I don't know about you, Jez, but a lot of my referrals, Matt, sadly come from people who have had claims. I've paid $40 million worth of claims in my couple of decades in the game. And it's at that point, and just to speak, I'm just openly, I think your viewers and listeners would be interested in this. It's usually at that point when we have our happy clients raving about us, because we've seen the full cycle come to end. The rubber's hit the road, and the chap that advised me on this risk initially was there to help me when the unfortunate thing did occur. So for us, it's really important that we're there and that policy delivers. And that goes back to Jez's point. That's why, generally speaking, the process has a natural filter point. We're not going to recommend a policy that's not fit for purpose or you're less likely to be able to claim on, because that reflects poorly on us should a claim arise. So you'll tend to find a specialist or a broker advisor are usually recommending policies that have very generous features or policies that are going to allow you to be more likely to claim on, rather than reduced or refined definitions that you might find in some other channels.
Yeah, and I mean, even like sort of taking it back at the point of, taking up a policy, like understanding the wording and understanding the loopholes, like, oh, you needed to have this locked in a separate cabinet in the car. Like, no one's going to, who would pick up on that except for a broker?
Yeah, that's right. They're 120 odd page documents for a reason, and that's because they hope no one ever reads them.
Exactly. Yeah.
Yeah, and just to give you a sense on our world with that, Jesus is the same, Matt, but there is one firm, they're actually a comparative software enterprise. They're a whole bunch of actuaries. So these guys didn't come down yesterday. They essentially sit in rooms with no windows, spent 20 years of their life studying. And their job, Matt, is to dismantle the 13 life office, well, retail advised life office of solutions that are available for us. So to give you a sense, if you think about those 40 odd conditions that you can claim on a trauma policy, these guys sit down and dismantle why one multiple sclerosis definition has 3 different gradings between one life office and another. So cost is one thing, but the qualitative features, so the strength of those definitions, those features, those benefits, they get graded. So can you imagine how riveting that job is? That's just for the 40 conditions that's on trauma, let alone what exists in an income protection policy, a whole host of clauses that you can and can't claim on. So we could write you a dissertation on this stuff. Insurance nerds like Jez and I get off on it, Matt, but the everyday Joe Blow finds this stuff
overwhelming.
Falling asleep after the boxing meet.
Underwhelming.
Underwhelming, yes.
And so, in the instance where, I mean, obviously, there's a lot of listeners and viewers out there that are that are tradespeople, and they're probably now, after especially listening to the first 2 episodes with you lads, thinking, okay, I really need to step this up and get the right insurance. Like, where's the right starting point? I mean, obviously, you guys collaborate and you work together over the years, but what does that conversation look like when somebody comes to you and they're like, I need to get my truck insured? And the judge is like, well, yeah, you do, and all your tools, but you also need to get life insurance. Like, who do you go to? Where does this conversation begin?
I suppose it's really understanding the individual client, understanding what their intention is, what they're looking for, and then preparing an insurance package, we'll call it, that suits their needs, really. So the more that we understand the client, the better then we can tailor the products to them, or know which insurers are going to be more suitable to them. If I have a claim, we're going to know, okay, he might be a little bit loose on his paperwork, so let's try and find someone that doesn't have to provide 10 years worth of receipts or whatnot. So by understanding the client, then we can actually recommend the insurances that we think will fit for them.
So we have a lot of clients out there that are builders. A lot of listeners and viewers out there are builders, right? And people come to them all the time, and they do the whole, okay, I'm ready. I want to get my home renovated. When can we sit down and have a chat? And it's got to the point where for a lot of these builders, they're doing so many of these meetings with people that aren't yet ready to have that conversation that it just becomes a huge time suck for them and effectively losing money. So for the listeners and viewers out there who are now thinking, okay, I'm ready to take up a policy, what are some of the things they could do in advance? So come the time they approach you guys, they've got at least a list of the bare minimum things that you guys can go, right, great, you need this, based off the information you've given us. What are some of those things?
Well, I'll just jump in quickly. I suppose on my side of view, especially with builders and things, tools, and having an asset list ready to go that they want to insure. Otherwise, it can be very difficult saying, just picking figures out of the air, saying I want to insure 20 grand's worth of tools. Well, do you actually have 20, or is it 30, or is it 50, or how much do you actually have? Because it's worthwhile doing it correctly, getting the insurance done right the first time round. So then when you do have a claim, there's no issues, or you're like, oh shit, hang on that day we had 30 grand's worth of tools, but the policy is only 10. So we're not mind readers. If a client has got what they want to insure in terms of their asset lists, or knowing all the vehicle information, the regos, then that way we can just go smack bang, get the quotes together, sit down with them, review everything, and then go from there. Might be a little bit more difficult on Dan's side, but on our side, it's actually having all the assets ready to go.
Dan, what about you?
Yeah, I think first and foremost, if you go back to the chat we had earlier, Matt, protecting your cash flow is number one. So if you're self-employed, I suspect quite a few of your listeners would be self-employed builders. I don't know if you can correct me on that or not, but what we're really looking to do is to be able to shore up that income that we need to protect. So the last 2 years, financials, notice of assessments, P&Ls, these things are really important to us because what we want to try and do is get a pre-assessment from an underwriter, both from a financial and a health perspective. But where it sometimes gets grey in my world is exactly what income are we protecting? And the person might say, I haven't gotten around to doing the 18 returns, or it's a bit rubbery, or I was half an employee, half a self-employed person during that financial year or that window. Having that information up front helps me. That's from a quantitative perspective. But then for a lot of guys, Matt, I don't know what your gender divide on your viewership is, but for a lot of guys that haven't been to the quack for a while, and the first thing I want to know is, have you got a rough sense for your height and weight? Are you or are you not a smoker? Do you know what your blood pressure is? When was the last time you got your cholesterol reading? You said you were a base jumper in your teens. Are you still base jumping? These sort of things, I know you have a chuckle, but are actually quite relevant to me. You might have suffered from mental health in the past. How long ago was it? Were you compliant on your meds? Are you still seeing a specialist? You mentioned you've got some staff. How many of them are full-time? How many of them are part-time? How many of them are contractors? What's your assets, your liabilities? Do you have a sense for what your last sort of mortgage number is? Is there still debt in the business, et cetera, et cetera? But there's sort of real two key things there. I want to know how much income we're looking to protect. If you were to prematurely pass or be unable to work ever again, how much of your debt would you want retired so your loved ones not left in a lurch? And then broadly, how is your health? One thing that's often interesting for me, Matt, is the underwriters want to know what your family history is like, and most of that is around hereditary or conditions that you're otherwise predisposed to.
Yeah.
And that's before the age of 60 that becomes a clutch point for a lot of underwriters. So a lot of my clients are, mum has high blood pressure, yeah, dad had cancer, there was a history of this, yeah, but exactly when were they diagnosed? So generally speaking, if they were first diagnosed north of age 60, that's okay. But if we had some diagnoses that were prior to age 60, that's when that health history does become to play a role. And then it's useful to know your immediate family is what the underwriters are usually talking about, and that's mum and dad and siblings. If there is a hereditary condition that runs in the family, particularly for a lot of my female clients, if mum was diagnosed with breast cancer before the age of 40, that is a big marker if indeed you've had any scans in the past that might have revealed lumps or things like that. And there are other sort of hereditary conditions that matter there. So a broad understanding of your health is going to help me in an initial discussion, but I wouldn't want it to hold up anyone going and getting some advice on these things.
I mean, because even in our podcast in episode 1 there, when we were talking about, you know, on the business side of things, and we went down the group insurance stuff, and, you know, in being able to get insurance for your employees and offering it as a benefit, like all those kind of things. So I imagine like people coming to you with, you know, business information as well would be super helpful. Well, this is the company, this is the type of work we do, this is how many staff we've got, this is how many contractors we have, and, you know, all that kind of stuff. Because I guess it all it doesn't all tie together in the one policy, but it would certainly tie together in the one within a bundle, right? Could do.
Yeah. And what I often find, Matt, is I've got a business owner or a key decision maker in a business who has a health issue themselves. So they might have diabetes, they might be a smoker, their BMI might be rather large. They might have already had a few false starts at this. They might have tried to get cover elsewhere or fell off a chair when they saw the cost again because an underwriter had loaded them, if you will, or excluded it. Understanding a little bit about that helps, because that also might help in the context of getting cover, as we referred to in the past, no questions asked in a group scheme. So if you've got 15 or more employees in your business, it's an attractive proposition to consider potentially offering group salary continuance to all of your team, given it's not subject to FBT and is fully tax deductible. So there's a few things to know around there which are useful as well.
And Jez, from like a business point of view, when you're talking about like general property, I mean, I've worked in, you know, construction companies, plumbing companies over the past that have had, you know, 100-odd employees, and we had, you know, all these locked up, you know, safes and toolboxes and stuff on sites and all the rest of it. And I mean, inevitably things go missing or things get stolen, and also you say, oh, okay, I understand all of your tools, like, that could vary so much from day to day. You know, potentially you could pull 30 odd tools off one job and bring them to another job for a week, and then take. You know, how do you protect that sort of situation?
That's a difficult question, Matt. But I suppose it's about understanding the client, understanding the value of those items, and then building a package to protect it. Like I sort of mentioned in the first chat we had, you can have unspecified cover covered anywhere in Australia up to $3,500 per item, and that doesn't matter where it is. So once you start getting the bigger ticket items, you're going to be specifying those anyway. You know, anything over say $5,000, you're going to have noted on the policy, and then that's covered anywhere in Australia. So I suppose it's just having the right cover and understanding the client and the sites that they're involved in, and the security around those sites as well.
Because, I mean, we had so many scenarios where things got stolen on site. Like we had big overseas containers where thieves would come in and they get an oxy cutter up the back of the container, hotwire the bobcat, latch onto it, rip the back off it, and just unload everything with a forklift. Yep. They also hotwired them. It was just crazy, the stuff that would go on site. And we were insured for that, but I just, for the life of me, can't understand how you'd include all of that sort of stuff within a pot. And on top of that as well, even like purchased materials. Like I remember once we were on site and we had somebody come in and cut all of the copper work that we put in throughout the week out over a weekend. They cut it all out and shipped it all off and sold it. And I was like, how do you protect that sort of stuff?
Yeah, it's difficult. I mean, around the tools, I suppose, yes, it's more achievable by having also a list of what was in there. Then you can just provide, Mr. Insurer, the assessors come out, here's a list of everything that's stolen and the value. It makes their job easier. The faster we can get a claim paid, the quicker you can buy your tools and get back to work. I suppose around when you're having things ripped out of the walls and whatnot, that's a difficult way to answer. It's depending on the policies are in place and the cover there. There's some policies where you can cover pre-built structures or things that you're constructing called contract works. But there's also many conditions and exclusions that on some policies that are going to limit what you're going to get paid. So it can be an actual nightmare of a claim. That's understanding what they're doing and try and best tailoring a product to suit them.
I mean, we managed to secure our own insurance policy from then on by getting the electrician to connect some 240 volt electric up to the copper that we'd installed, so it wouldn't happen again. And probably open another potential can of worms. But so anyway, I suppose fundamentally, like in the listeners and viewers out there that are wanting to equip themselves the right way before they come and see you, don't be in that mindset of I'm trying to pull the wool over the insurance broker's eyes to get a lower policy, because it'll come back and bite you on the butt.
Absolutely.
And to be fair, like, you should really have a detailed list. I mean, we always had to anyway, especially working on site, like tool registers and all this kind of stuff. I guess that makes it super easy for an insurance person, because you go, well, who's our tool register? This is everything that's on the job. Go and insure it.
I mean, at the end of the day, the insurance company will give you cover. I mean, as said, with that unspecified items, you can cover, 20, 30, 40, 50 grand's worth of cover. But once you have a claim, the onus is on the client to provide proof of what's been stolen or damaged or whatnot. So if they can't provide the proof, the insurance company will simply say, well, that's not our problem. If you can't prove what you've had, how are we meant to pay for something you can't prove?
And so proof of purchase as in like payment receipts or invoices?
Well, receipts or, anything to actually help verify that, these items that you're claiming are actually legitimately been stolen or lost, or you actually did own them.
I mean, I think that's pretty much congruent across any insurance, isn't it? I mean, even travel insurance is effectively
correct.
The same.
But I suppose with tradies, that's typically where they can be brought undone, because receipts and paperwork isn't always their forte. Mm-hmm. I know some tool suppliers, I think it's Sydney Tools, always keep a digital record that you can request, and things like that. But then again, if you just go down to Bunnings and buy some things, in 5 years' time, you've got probably buckets of ever finding that receipt.
I mean, I've sort of got in the habit years ago of just taking photos of things and saving it to Google Drive in annual purchase folders. It's not the greatest solution, but it's better than not having anything. And even just recently, we had a trip to the Maldives, which went a bit south, and we had to put a claim in for that. And I just had everything was in there. Everything was already in there. So that certainly paid.
Absolutely.
Well, I don't know, lads. Is there anything you want to cover off on? I suppose before we wrap this up.
I mean, it's not. The short answer is talk to a broker. Whether you use them or not, they're going to give you some advice that you can take away and use in your business. I guess that's the big motto I would recommend.
Yeah, definitely.
Yeah, and just the overarching sort of point there that I'll back up with Jez's comment, Matt, is that oils ain't oils. And if there's, if it's true for liquid that you throw in your car, it's definitely true for insurance. The difference between a quality contract and literally a rubbish one is, I've worked in a few industries, but I've never seen the difference between a quality contract and a rubbish one. The difference in that in insurance is significant. And then really it's only as good as whether it pays or not. It's like when you're getting your home valued, someone says, oh, what's it worth? Well, it's worth what someone's willing to pay for it. And what's your insurance policy worth? Well, it's worth what it says it would do on the box come claim time. And yes, that's got to do with the definitions and the wording within your policy document. But as hopefully you've heard today, it's also got to do with who's helping you on that claims journey. So you can do it on your own and take time out of doing what you do best, or you can use someone who's going to help you at the front end to ensure what you're buying is quality, but then hopefully never, but if you need to, help you at the back end, making sure that claim gets paid as swiftly as possible. Yeah. And in some instances, it might be that you shouldn't have entirely received the claim payment, but as Jez says, you might have been entitled to something because it was really grey, or there's a degree of ex gratis in relation to your circumstances. And if there's one thing that's not clear and cut, Matt, it's insurance.
And I think over the years of working with Jez, it's just easier. I just can't be bothered going to look for that sort of thing. So, I mean, Jez just sends me every year here, this is it. Is this right? Yep, sure, whatever. Yep, do it. Good. Send me the bill. And it's just done. And it's taken care of. And if anything happens, God forbid, then I know Jez is there to sort of to handle that situation. Whereas I wouldn't even have a clue where to start.
You're right. I mean, talking about basic tools, claims and things is okay. But when you're talking about $100,000 liability claim and someone's threatening legal action, you just need a friendly hand to hold you and walk you through what you've got to do to help you sort out the situation. And that's a broker's job.
All right, lads.
That's a good point. Sorry, Matt. It's probably, the real value that an advisor broker brings in these circumstances is less the clear-cut stuff. In my world, someone prematurely passed, they're 6 foot under, provide a death certificate to the life office, the claim's going to get paid pretty swiftly as long as they didn't take their own life within 13 months of the policy being issued. It's pretty binary. It's the ones where you've got a degree of complexity to it. There's some ambiguity over whether or not the individual's eligible to work. There's some ambiguity or discrepancy around the medical professional's opinion on whether this person can work or not, or is or isn't totally impairmentally disabled. And I've had a few sort of cynical clients say to me over the years, yeah, but that's what lawyers are for and that's what the media's for. And I say, great, go for it. You can take your ambiguous claim to Tracy on 6:30 if you want. It's going to make your life very public. And to go down the legal road, I've got a case at the moment where the chap spent, I didn't see him, but the chap spent $33,000 in legal fees having a total and permanent disablement claim paid. It eventually has been paid. But certainly the individual that I'm referring to didn't have a broker on their side. So
it's a big chunk of a payment.
It's a big chunk of a payment already. Not even to mention the stress that he's gone through as a result of having to take that path.
So that's actually an interesting point. So in the instance where somebody does have a claim, they are insured. And I mean, I've got a mate of mine I was referring to before. He had a motorbike accident and it was bad. So he's got like a permanent disability forever. But anyway, he's got quite a large insurance coming through, but he's had to use a lawyer to get it. And so that lawyer's taking a pretty hefty chunk.
Absolutely.
I mean, not that that's bad, mind you. I mean, he's still going to get the claim through, so it's working. But I mean, I suppose fundamentally, if he had gone through a broker, it might have been a different story.
Correct. And a good broker, Matt, their main mandate is to be there for you at claim time. Otherwise, there is absolutely no point in them being around. And Jez and I know we sort of support that view. So if you've got someone working in your corner that isn't helping you at claim time, they should be. So if you make sure that having a good and robust claims process and service offering for you at claim time should be part of whomever you seek advice from in this stuff.
Beautiful. Well, gents, I think this has been really good. For the listeners and viewers out there, if you've got any further questions around what we've been speaking about in this series, so whether it's life insurance or personal income protection insurance, tool insurance, vehicle insurance, so on and so forth, by all means, if you've got any further questions anyway, hit me up in the Facebook group, because I'm sure Jez and Dan would be more than willing to come back on and answer those questions. It is a big topic, so we've tried to cover as much as we can, and we hope we've ticked the box there. Or I certainly hope as well that we've at least made you think about your current situation, because I don't think it's as scary as it needs to be. And there's obviously, as you've learned here, there's solutions that can help you, and there's certainly solutions that can be tailored towards the individual and your business and all that kind of stuff. So it's a matter of just having the conversation with somebody who's competent. If you'd like to get in touch with Dan or Jez, by all means, you'll be able to do that through the show notes. There'll be links to both of those guys there. And when the SiteShed Academy is up and running, those guys will be likely in there as well with some offerings and services. So, guys, thank you very much for your time. Much appreciated.
Yeah, no, thanks for having us.
Thanks, Matt. Great to be back.
And we look forward to, I suppose, working with you guys in the new year. Have a lovely Christmas. For the guys that are probably watching this, it may well come out well and truly after Christmas, but we're about to jump into Christmas, you guys. So we're all going to go crack a beer after this podcast.
Thanks, Matt.
Thanks, guys. And that's a wrap.
Thank you.
Thank you for listening to another episode of Toolbox Talks. If you're liking what you hear, then you can head across to the siteshed.com, where you can join our community by signing up to our Toolbox Talks. You'll get sent a weekly notification, which is basically a highlight of everything that we've spoken about during that week, along with any other industry news that may be relevant or specific to the trades. If you're enjoying the show, you can head across to iTunes, Stitcher, or SoundCloud, where you can leave us a review. That would be fantastic, and all the reviews get read out in the show. Likewise, if you have any friends or colleagues that you think would benefit from the show and the episodes that we create, then please go ahead and share it with them.